This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil. Welcome back. So what I'm going to do today is talk about multiple time frames. I want to show when I use an extra time frame during a pullback to really refine the entry, reduce the risk, make sure I'm not making a mistake just looking at two time frames. So let's go through this in detail. Now, if you want to learn more about some of these multiple time frame techniques, I would go to the book. It's at rabilstockresearch.com/book. Also, if you do like this content, please hit that like button and also subscribe. So I have the grid of General Motors up with the monthly bottom left, weekly bottom right, daily in the upper right, and an hourly in the upper left. Now, I know there'll be some questions as to whether this is a good trade or not. And I don't really want to argue the merits when I look at the monthly and the weekly as to whether this is a good weekly, daily setup. All right. I want to focus more on the shorter time frames because that's really where this lesson comes in. So let's just talk about the bigger picture though. Obviously, if we're looking at this as a pullback trade right here, we've got a rising 18 above a rising 40. We've had overrun here, and we have green DI showing a lot of strength, but we don't have ADX confirmation. And typically, if we're making a move, that's a continuation signal, right? It's not the start of a move, it's a continuation signal. We want to see that ADX confirming each new high. So again, the merits of this as a buy signal I'm not necessarily having a recommendation here, obviously, right? So I want to show how we can use these smaller time frames. Now, one of the things that I would say is that if you have this resistance up here, even if the momentum is good, all right, we've got to make sure we get really good entry because we know our target area is there's pretty good resistance up here. So we're going to need to be able to take a target or maybe two before we hit that resistance. So let's not worry too much about how good of a signal this is on the setup side. Let's look at the trigger side, because what I want you to show is we have this nice move to the upside. We get good confirmation that confirms this up move. And then we get our kind of an ABC pattern, right? Now the ABCs can come in different forms, and this one we're not making a lower low. What it did though is that it went inside the zone and then came out. All right. Now, everyone knows that when there's overrun, not everyone, but anyone who's taken my course knows that if there's overrun here, even if there's no sign of selling pressure, if you notice the ADX has stayed low throughout the pullback, then we need to give this a little bit more time, right? We need to make sure we get the second signal, not the first one. So this move up here that crossed above the 40 is not a signal for me because there was overrun. We want to wait for a pullback. And in most cases, what I'm looking for is a pullback that holds the 18. But there are times where we'll come in the zone and we'll come out of the zone, meaning come in the zone between the 18 and the 40, and then come out and we test this low. Now, what does that do? In this case, we don't have the downtrend line, but in a lot of cases, what that'll do is that'll be the 2 in a 1, 2, 3 change in trend. And when we get some sign of an up move, so if we get an up move here, it could be pretty attractive, and it would be kind of like the second signal, not the first crossover, but it would be the second one for MACD. That would be a lot more of interest to me. All right. Now, if you look at the way this pulled back, this portion of the chart, if we look at that in a zoomed out, hourly, we can see we made a move up, we rallied. We made a move down, we rallied up, came back down, tested a low, went to a new low, and have now rallied up. So we've clearly made our ABC, but look at the difference in the strength of the sellers here. All right. Now, if you're just looking at two time frames, you're saying I've got downside crossover here. I've got in the zone and out of the zone here. So any move back to the upside, right, would qualify because I've already made a move up and come back and tested. So if this starts to turn up and this starts to turn up, then I could take this trade. However, if I'm looking at this time frame, I recognize that that's really not a good idea, actually. We've got massive, massive overrun, almost to the point where it's oversold. But more important to me is this sign of selling pressure based on the red DI. Red DI caused the ADX to go well above the 25 line. So when I see this, now I know I need green DI to actually make a move back up and form some kind of a pattern. So I'm not necessarily looking for a green bar entry now on the daily because I've gone and referenced the hourly chart. Now, what's important about this is that I don't have to trade off the hourly. All the hourly is doing is giving me a reference point and more detail into whether I should be taking the next setup here. So what it would tell me to do is if I'm taking this as a weekly daily, I probably want to be more patient. I probably don't want to take just a green bar to the upside. I really need a little bit more strength in the hourly green DI, to kick in and show a little bit more strength from that standpoint, which means, maybe what I'm looking for is for it either to come back up through here or to come up, test the 18, and then turn up, which would be more in line with what we'd expect to see if the hourly does this. Now, again, you can keep an eye on the green if you want, but if you don't want to trade off the intraday chart or look at the intraday chart anymore, you can just use this as a reference and say, okay, I know this is a pretty strong pullback. I probably don't need to jump in right away. Now, for all I know, this is going to take off and just go, all right? And using the 2 time frames would have worked fine. All right. I mean, it does meet the criteria. And if you don't want to go down another time frame, that's a part of your plan, and you don't look at that, that's fine too. But what I'm telling you is that I think if you do this, if you add this part of the equation in, it's going to help refine and reduce some stop outs. All right. You're gonna see that a stock like this, maybe not every single time, right? Maybe this is going to be the one that goes, but say 8 times, 7 times out of 10, you're going to have more troubles here and potentially even have this fail. All right. So we want to keep this in mind when we're looking at these type of trades. If you're focusing in on the pullback here and coming in and out of the zone without looking at the strength of the pullback, it just lends itself to a lot more volatility, a lot more, like I say, a lot more times where you put your stop in and it comes down and it ends up taking you out before you see any real upside or anything like that. All right. So hopefully this will be useful to you. Make sure you keep an eye out on all these different time frames for entry. All right. Let me know if you have any questions.